While we wait for more of those insights, let's get to Paul and Mark. Mark, a little surprised that based on these numbers, which sound like they beat at least the headline expectations, the stock is down. But there's always the whisper numbers and the question of what it has to hit in order to justify the valuation where it is here.
I think that's right. It's also one of the stocks, I call them the Super Six, that have traded up space 30 to 60% year to date. So if you were going to look for a high bar stock, it's right here. It's with Netflix. These subscriber numbers pretty much hit the whisper that was out there. The revenue came in a little bit light, so versus the whisper. So the question is going to be, are they having any issues ramping up advertising? I think they are. I think I'm pretty confident they'll be successful with it long term. It just may not grow as quickly as the street and, frankly, the company would like. This looks like a pretty decent print to me. And if you're a bull on Netflix, you probably got greater confirmation in the bull thesis. What I haven't seen yet, unfortunately, is the guidance that they gave for next quarter.
Speaking of the guidance, with that stock down about 4.5 at the moment, let's get back to Julia Boorstin, who has it. Julia.
Yeah, the guidance is really the reason why we see the stock now down 5% after hours trading. The company saying that it sees its third quarter revenues at $9.73 billion. That is below the consensus estimate of $9.82 billion. Also guiding to third quarter earnings per share of $5.10 versus $4.75 estimated. So that is so the earnings would be above estimates, but the revenues looking at below estimates. And this is a company that is really beating expectations on subscribers consistently, looking back at the past couple of quarters. So the question is, if the company is beating expectations and subscribers, why is its revenue guidance for the third quarter below estimates, especially considering that it's going into Q3 with so many more subscribers than anticipated? It really seems like that's at the heart of the stock trading lower right now. Don.
Okay, Julia, thank you. Paul Hickey, I'll go to you on this one, especially as it does look like they also say that full year revenue guidance is going to be 14 to 15%. That's up from 13 to 15%. But we do know Q2 and Q3 do tend to be seasonally the weaker quarters for Netflix in general.
Yeah, exactly. I mean, former President Trump once said something about walking down Fifth Avenue. He could do whatever he wanted and people would still love him and vote for him. Next, Netflix could say whatever they want in their July report and the stock goes down. Historically, they've only gone up in reaction to the July report 23% of the time in its history as a public company. So it normally declines in reaction to earnings. And for most other quarters, it also does as well. The only quarter where it typically reacts positively is after it reports in January. So these are all short-term moves. I mean, just look at a long-term chart of Netflix, and it shows that these one-day reactions aren't too much to get excited about or worry about. And, the longer-term picture is Netflix is still the dominant player, and as other companies are looking to exit the space or struggle, it's in the pole position. So okay. I think in short-term reactions, we shouldn't overreact to them here.
Okay, that makes sense if we're just talking about Netflix. But Mark Mahaney, the NASDAQ overall has had a couple of rough days, especially yesterday. And I wonder to what degree a name like Netflix that has had such strong performance overall was part of the Magnificent Seven to an extent that group is still together and the members aren't going solo. Is this going to give the market any confidence given this guidance number?
I don't think so. And this thing is kind of on its own. I think the term is sui generis in Latin, but whatever. There's no real read through, but except that just from a stock perspective, look, the bar's high, and again, you've got any names that have materially outperformed the market year to date. Google's in that list, Meta's in that list, Amazon is in that list, Spotify is. It just tells you need to have clean beat and raise numbers for the stock to hold. I think just for the stock to hold. That's where the bar is on some of these names. So, I like Netflix as a stock. It's not one of my top picks because it's not dislocated. Now, you bring it down to 600, I'd get a lot more enthusiastic about it. But I still think it's a great running away with the pack story. What I want to hear on the earnings call is let's talk sports, let's talk about gaming, and let's talk about this advertising revenue ramp. That's what I think long-term bulls are really focused on. And if they do that, you'll probably find a lot of people buying the stock, tomorrow on this kind of correction, just like they did in the March quarter.